Welcome, ladies and gentlemen, to a new edition of our live virtual online roadshows here with Swiss Resource Capital and Commodity TV. My name is Jochen Steiger. I'm the CEO and founder of Swiss Resource, Commodity TV, and Rohstoff-TV. And I'm very happy and a very warm welcome from my side. You see also already Mark Child here, who is live with us from Nicaragua, who is the CEO of Condor Gold. Mark, hi, and how are you?
I'm well. Thanks for having me on, Jochen.
Yeah, perfect. Thanks for taking the time. And Nicaragua, what time do you have now there?
We're now 9 o'clock in the morning.
Oh, that's okay. That's a decent time.
-8.
Super. So you could have already a coffee. That's fantastic. Okay, super. I see investors here checking in. Just let me do some legal remarks before we start with the presentation. Of course, we are fully complying to European data security law and also Great Britain and Swiss data security law. Nobody can see each other, nor any names or emails. We want to have a presentation of approximately 20 to 25 minutes. And as usual, afterwards, a very lively Q&A discussion. That would be great. So for the Q&A, please use the chat function to type your questions in, as you are used to that, of course. And yeah, we look forward then. I will post the questions to Mark, and we look forward to a nice and lively discussion. Okie dokie. Let me check again the attendees here. Yep, they are checking in slowly still. That is perfect. Let me bring up the presentation. All right, super. So I think we can slowly start then, Mark. If you are ready, I bring up the presentation, and I would say the floor is yours.
Yes, thank you. Thank you again for that introduction. Yes, I'm Mark Child, Chairman and CEO of Condor Gold. It's a pleasure to be joining you all from Nicaragua. Beautiful country. This is the background. Here is the hotel room of the Intercontinental, where there's reasonable Wi-Fi broadband. So this is our statutory disclaimer. A copy of this presentation should already be on our website at condorgold.com in the UK and in Canada. So the company's strategy is twofold: to construct a base case 2,300 tons a day processing plant producing 80 to 100,000 ounces of gold a year on the fully permitted Mina land here in Nicaragua, and then materially expand that production. We look to double that, and then continue with our successful exploration strategy to prove a 5 million ounce gold district. This is an investment highlights. I mentioned the strategy. We're looking really in the first few years to be 100,000 ounces of gold. We've got 3 permitted open pits containing 1.12 million ounces of gold. And you can see the breakdown here of the pits. There's 900 in the main pit, 900,000 ounces at 3.1, 120 at 8.6, and 97 at 3.8. This is super high grade, highly economic. We're already clearing the site infrastructure at the project, and we've got the project. We can materially expand this by adding underground up to 170,000 ounces of gold a year. We've got a district scale, we believe, and we're in the process of proving that. In terms of economics, we're about $35 an ounce in the ground, which is a fraction, less than 2% of the current, or about 2% of the current gold price. We have $690 all-in sustaining cash costs because of the high grade. The last quarterly report shows, because we're TSX listed as well, 11 million in cash, and relatively cheap on the price to book ratio. Well, that's significantly undervalued because it's at $1,250 gold price. Potential for early cash flow by toll milling through nearby mills. And our resource and reserve is the bottom right. It's 2.4 million ounces. If you think of it as half the indicated category, half inferred, half open pittable, and half underground. And within the open pit, there is a reserve of 6.9 million tons at 3.1 grams for 675,000 ounces of gold. Here's Nicaragua. So I'm talking to you today from the capital, Managua. Gold, we heavily sponsored a mining conference 10 days ago for over 2 days. It was packed out. The government's permitting everything here, and gold last year was the biggest export, and then coffee, and then beef. They haven't changed the mining law so far for the last 15 years I've been coming here. You get the concessions for 25 years. There are 4 commercial mines in the country at the moment. and we're welcoming all mining that's coming in. The tourist arrivals obviously have taken a hit because of the pandemic, but they're very pro mining in this, so we're in the right address. We've got what's called a low sulfidation epithermal vein system. We've the resource of 2.4 million ounces, and I've added the silver in to make it 2.4. Is over 7 deposits. All of these can be expanded by drilling along strike and down dip, in our opinion. It's a former gold mine that produced 500,000 ounces of gold at super high grade, 13 grams. The mine closed in 1956, so it closed 75 years ago. And in that period, 2 nearby mines, or 3 mines in the country, have all been operating and been depleted over that 75 years, and this hasn't. So there's huge amounts of potential here. Noranda never drilled anything; they just did grade control and mined it down the high grade veins. So this is quite an exciting major district in the country. Here's the main vein. This is Landia vein. There's 1.3 million ounces here. So you're kind of, as you can see, you're looking at $2.4 billion of gold in the ground at today's gold price just here. 900,000 ounces is in the pit, and 400,000 ounces underneath that. Our PFS is a bit dated now. It's out in December 2014. This we will update, and I'll come on to this later. We will update our numbers in the near future. But this is done at $1,250 gold price, and we're still very economic at $690 all-in sustaining cash costs. There is no community here. There's a mercury mill here that'll get moved, and there's a community off to the far left. There is no resettlement at all involved. This is drilling through the main pit. We have 10 meters true width at 34 grams. There's now over 80,000 meters of drilling on the project, some super high grade results. This is the 3 permitted pits. And you can see everything inside this magenta purple color is permitted for extraction. The processing plant is here. This is 1 kilometer grids. We have 900 in the main pit. That's 1.2 kilometers long, 500 meters wide. And then there's another 100 to the north and 120 here at 8.6 grams, very high grade. And it comes out of the main pit through the processing plant and down to the tailings storage facility. Underneath this, you have another 1 million ounces of underground. With today's gold prices, you can push all these pits deeper, which is likely to happen, which is so you get more open pit mineral resource. This is just highlighting that the Landia project is one of the highest grade open, over 1 million ounce permitted projects globally. And you can see that here with very low all-in sustaining cash costs, which means it's going to be highly economic. We bought the mill. This is now we're shipping it. We've instructed shipment of half of the mill so far. It's brand new, coming from Metso Autotech in Finland. We bought it for $6.5 million from First Majestic Silver, who ordered a brand new mill to go into Mexico and then cancelled the mill because of problems. We paid for half of that, $3 million in shares at 50p, around about the current share price. And the balance of 3.5 million, we paid 80% of that so far. It's, as I say, it's on its way into Nicaragua. We think for the first year we can do about 100,000 ounces here. It reduces the long lead time by 12 months for the project. Mills take 45 weeks to manufacture from scratch, and Metso is the world leader in crushing and grinding equipment, and it comes with 18 months warranty. So we're delighted to have secured this opportunistically. By putting in bigger motors, we can get the throughput up 22% to 2,850 tons per day. But it's a great move forward for the project. When I meet ministers, they are delighted. We've actually ordered a mill that's coming into the project, as are the community and our other stakeholders. So there's a real momentum here in Nicaragua about the project because we've got the mill. It step changes everything. And this is the mill feed. So having got the mill, I'm showing you here what we can put through from the permitted pits. This is fully permitted for extraction for 10 years, and the construction's permitted and so forth. So if you take the 3 permitted pits, we can get out of that 8.5 million tons at 3.1 grams. And a gram's just over $60, so you're close to $200 a ton of rock here. So if you think about it, we've got 8.5 million tons, each ton's containing $200 of rock. That's delivered to the processing plant. That's around about 850,000 ounces of gold before metallurgical recovery. We've got the underground underneath this, so we can do 100,000 out of it with the existing equipment, and we could take it up, as I say, by 50 later. Now, high grading, I have a business, I've been involved with this for 15 years, but prior to that, 20 years in finance. So it's very much a money mine. We want to have a minimum capex, maximum cash flow to begin with, minimum dilution for shareholders. The directors own 22% of Condor Gold, so we've got a big amount of skin in the game for this. So we see a two-stage approach to production, but stage one will be 100,000 ounces. So what we're showing you here is 1.6 million tons at 50% higher grade at 4.6 grams for 245,000 ounces of gold. And to give you that scenario, if you use the mill here we just purchased, 2,300 tons a day, and you put 4 grams material, not 4.6, I'm going to be conservative, like the Swiss, 4 gram material coming through here, 91% metallurgical recovery, you get 94,000 ounces. And if we actually were to increase the motor size, we get 117,000 ounces out of the mill we just purchased, just to give a guide. So I feel comfortable in saying 100,000 ounces in the first full year of steady state production. I have to emphasize that, but which is a great little starter. And then we can potentially double that capacity. We've just finished this drilling in the starter pits. So this is Landia open pit. This is the 900,000 ounce pit I showed you earlier with 400 underneath it that can be expanded down depth. And we've got within 35 meters of the surface, we've got 60,000 ounces of gold. And that is all finished, this drilling, 3,500 meters of, it's actually now completed today. It's all been drilling. There's about 45 drill holes. We're taking this to 25-meter drill spacing to take it to measured. And this is the last drilling you need before extraction. And look at these results, 21 meters true width at 6.5 grams. That's fantastic. And it's really shallow. So there's no pre-stripping to do. You can go straight in. It's on the surface, and you go down 35 meters and you get 60,000 ounces. What's the significance? Well, just look at 1,700 gold, not today's price of 1,900. But you'd be looking at $90 million of revenue and $60 million of operating cash flow out of within 35 meters of the surface out of 2 high-grade pits. That's why we've done it. You've got your payback of the debt within a shallow, high-grade starter pits just on Landia only. I think that's very exciting for the economics of the project. We're also clearing the site. So if I just talk you through this, we've got the processing plant location is here. We have a stockpile here. This is the road. It's a tarmac road. We have an entrance here, and we have a berm. It's in the dark, so it's a barrier there to sound and noise and dust. So this is 22 meters wide. I should probably put a photo on here, but we've completed this road for 700 meters long. This is the access road, a haul road around, and we can go to Mestizas up to the north here. And over to here, to the left, we have the main Landia pit. But we're clearing all this site of 11 hectares as we speak. The second part of the strategy is to drill down, is to expand the resources. So all the core area that's permitted can be expanded, drilling down on the ore shoots and along strike. And these small ones, 4 of these small ones, we think can be expanded, particularly cacao. Drilling down the ore shoots, you can see underneath the pit here, this is where there's the road that I referred to. That drops down 150 meters. And so there's a fault that drops the epithermal system down. But it means the gold's preserved. It hasn't been mined out by Miranda, which is great. And underneath the pit, you've got 4 intercepts. Each is over 10 grams. This one's 60 meters true width at 10 grams. And this expands, so we need to drill down, step down 50 meters across 50 meters. And there might be a series of these high-grade ore shoots that contain 300 to 500,000 ounces in them going to the south. We've got to drill it, but it's exciting from a geology perspective. The other target we're drilling at the moment, and we've actually, we just heard this morning, this is 3,500. There's a typo here. We've completed 3,500 meters of drilling on Cacao. It's 4 kilometers away. It's only 60,000 ounces now. We think there's 500,000 ounces here, and I'll just come on to that. So when we say let's get to 5 million ounces, this is one main start. So we're testing. This is 4 kilometers. That's a very big vein in Georgia. It's a nice long structure. When we drilled it previously, it had a very wide vein, which is also key. The 60,000 ounces is here where my mouse is, and then we drilled down those ore shoots, and they do get deeper higher grade at depth, and then we drill along strike. This is exploration drilling, so I need to emphasize there's risk associated with this. It's not, it may or may not be there, but so far we're very encouraged by what we've seen. So what we're trying to do is we've got, if I just describe this, you've got 500 to 600 meters here where the Cacao resource of 60,000 ounces is. Then we've got 2 kilometers, and this yellow area is basically a colluvium, meaning it's on top of the host rock, so you can't see the vein, and that makes it quite technically challenging. So you're having to sort of step out underneath this colluvium of 20-30 meters, and then drill 100 meters, 150 meters plus underneath it, and we've stepped out quite a bit. Sinter rocks show the top of an epithermal boiling system. That's the interpretation, and that's what we're finding in the drill results. So the hope is the entire system is preserved here, south of that highway fault. Whereas actually at La India, it's either been weathered, or the artisanal mines have had a go at it, or both. Well, actually, it will be both. Or Naranda have mined some of it. So this is a preserved system, and that gives you massive upside. So we just drilled here, and we hope that we can connect over 3 kilometers the vein by drilling on this outcrop. The green here is a hill, I should say. We can connect here with the here, and then we drill in between. So, and what we're also looking for is this dilational opening. So if we hit wide structures, that's terribly exciting from the geologist. We might not hit all the grade, that might be deeper down because the grade increases at depths, but we're testing this as with 5,000 meters is a superb target. I've walked the whole distance here, and it looks very exciting. If I just interest of time, if I just go on to say we've got this district, we've got calderas in the north and old volcanoes in the north and the south, and these are the heat sources for the vein system. We've got regional faults running through the project, so structurally very complex. We've got good reasons to think we're on a district. Here's the focusing on 300 square kilometers, not 580. We've got 2.1 million ounces here, and we got and here's the fault, the highway fault I talked about, and so the system's preserved here. Here's Cacao in this linking structure, so you have 2 links. And so what we've been doing while we've been getting permitted, we've been doing the groundwork for showing a 5 million district. So we've done all the soil geochemistry, the airborne, the helicopter-borne geophysics, the structural geological model, lots of detailed mapping, lots of scattering. So this is drill ready on several targets. There's 110 kilometers of veining. So there's very good evidence here that we've got a 5 million ounce gold district, but we need the money to go and drill it, of course, and there's always a bit of risk with that, but we're confident we can get there. So what are we up to at the moment? We've got 80 employees on the payroll right now. I was just up at La India last week for a couple of days. We've bought most of the surface rights, 96% or so. We just bought another 3-4 hectares 10 days ago. So it's progressing. The last 4% is always tricky, but we'll get there. We're running the project as if we own 100% anyway. We're 80% fully engineered on the tailing storage facility. We're over halfway through the site-wide water balance. We're finalizing all the technical studies and getting this shovel ready. So they're all underway. In terms of the short-term objectives, get the rest of the land. We've completed the drilling on La India starter pits with 5,000 meters. We've completed 3,500 meters on Cacao. We're going to move a drill rig for a few weeks up to Mestiza and wait for drill results to come back. So this is a iterative process. We don't want to be drill rig led. We need to stop, sometimes pause, look at the results, wait for the assays to come back, which are taking a long time from labs at the moment, see what the gold is, and then plan the next 1,500 meters or so. Drill rigs on Mestiza. We've got a rig up there now. It's completed about 500 meters already, and we'll have a second rig joining it. The mill will come into the country, and we're advancing all the studies on the processing plant and clearing the site. So quite a lot going on. We've got 3 drill rigs now, and we'll have 2 geotechnical drill rigs arriving in the next couple of weeks. Environmental and social, we do a huge amount here. We've lots of engagement projects. We're spending $20,000 plus a month in the communities. The big project which we inaugurated 2 weeks ago was a drinking water project which we imported from Israel. Cost us a couple $100,000 with 2 liters of drinking water per second, and that changes it because there's no real drinking water up here. We do everything to the IFC performance standards, World Bank standards for environmental and social, which we're signed off to for pre-construction company. After 21 minutes, so I'm going to wrap up.
All good, no worries.
So we've got about 100. So the investment case, the base case will be 100,000 ounces of gold. We're fully permitted, which is great. That can take a long time, and it did take time with us. We had a couple of setbacks. We can materially expand that to 150, 170,000 ounces. The district play, important at this point in the gold cycle to push the button and go for that. We've got strong economics, low all-in sustaining cash costs. We're $35 an ounce in the ground actually now. And in terms of our corporate structure, the directors, Jamal and myself, have about 21%. We have Nicaragua Milling Company with 5%. Swedish fund has about 4%, and Rohstoff-TV has 3.5%. Market capitalization is about 65 million. And that just concludes where we are. And I'll just end there.
Super. Thank you very much, Mark. Great presentation. So let me change here my view. All right. Whoa, a lot of questions. Good. So let's get started here. An investor is wondering why you do not have, let's say, that many new investors on board, but I think this changed already a bit, and why the influential Ross-BT is selling. So is he selling? I don't know.
Yes. Ross-BT has sold some of his shareholding. Ross-BT, as you probably know, is retired from Pan American Silver, which he founded, and he's heading for the exit in terms of retirement. And he sent me a very polite, we get on very well, sent me a polite email to that effect. Condor is non-core for him. It's only got a 3.5% shareholding. His interest in Condor was about 4 years ago before he formed Equinox Gold. And part of his rationale for the investment was that he loved the investment, he loved the project, but I think he wanted to have a foothold on a few junior companies with a possibility of rolling into an Equinox. Equinox has now got 2 mines under construction. It's heading for 1 million ounce production. He's chairman of that and got a massive shareholding in that. That's where his economic interest is. So I think he's trimming his selling, if you like, non-core assets. Having said that, since we bought the SAG mill, he hasn't sold anything. So I think that's a big signal that he likes what we're doing and that we've got a mill coming onto the project. But I think he's probably a loose shareholder. Shares are there to buy and sell and not fall in love with.
Exactly. Well, this happens all the time. That's quite normal. Okay, then we have 2 questions to the SAG mill. And you recently purchased a SAG mill from First Majestic, as you elaborated, which wasn't built directly for your project. Is this mill the ideal mill for your estimations and future production, or was the purchase mainly for financial and or timing reasons?
It's both. There's a quick answer. Our pre-feasibility study 6 years ago was for a mill exactly the same size by complete coincidence. So we've had a bit of luck. That was for 2,300 tons a day. This mill 6 years later can do 2,300 tons a day. So is it the right size? Absolutely yes. The mill at San Dimas is slightly different. So you have to run this past the technical by the metallurgists at Metso Outotec and by SRK to say what throughput can you do with our rock? Because it's slightly harder, it's a slightly different system, slightly different metallurgical recovery. And they've come back and said, actually, this mill can do 2,300 tons a day. So it was originally designed for what's called an AG mill and an AG mill, but it was dual purpose to do as a SAG mill. And so the advice we have is to use SAG mill, which is the same as in our PFS. So it's absolutely perfect to start off with. And it cuts our lead time by 12 months.
Okay, lead time is very important. That's one thing. But how much money have you saved through that deal? Can you say that?
We probably haven't saved a huge amount of money in that we paid First Majestic effectively what they paid for the mill. So we've got the invoices. What we haven't had to spend any money on is the 18 to 24 months of planning that First Majestic did, all the consultants, all the designs, all their internal costs of staff and engineers and everything. That can be another couple of million, quite frankly, over 2 or 2. So we haven't spent anything there, but we've basically reimbursed them the cost.
Okay, super. I think lead time is also really critical because we are entering now the next phase of the bull market in gold. And I think you rather would love to be earlier in production than later, I could imagine.
It's hugely valuable to the shareholders. Yes, it's 40 to 45. If you want a new mill now, it is 3 months to design it. It's 40 to 45 weeks to build it brand new, bespoke in Finland. And it's 2 months to ship it. Okay, so we'll cut all that out.
Well,
We've just got
nice.
2 months shipping.
Yeah, super. So then there is an investor is asking, good morning, Mark. Is there a date when the BFS can be expected?
It's a good question. We have started the bankable feasibility study work. And so all studies are underway for that. We've got the 2 drill rigs I mentioned are actually going to site within the next 2 to 3 weeks to do 1,000 meters of geotechnical drilling. We have met tests to FS level being done. There's over 1,000 kilos sitting in Canada at the moment doing met tests. We're doing hydrological pump tests to FS level, which start next week. Processing plant designs, because we bought the SAG mill, we've got to design the rest of the mill to go around it. So we need the jaw crushers, the belts, the gold rooms, the tanks. All that's got to be designed to bankable feasibility study. I would like that to be completed by the end of the year. I can't give a hard timeline because some of that is out of my hand because we've got to see how the drilling goes operationally. And the consultants are very busy at the moment, as you can appreciate. So all this is being done by SRK. And the people who did the engineering designs for the mill that we bought are likely to be engaged to do the whole processing plant design for us. So I went to see them in Arizona a couple of weeks ago in Tucson, Arizona. So that would be a guidance.
Okay, super. Then there is an investor from London asking, when will an EPCM contractor be appointed for the project?
Well, not until we've got the FS study out. So the bankable feasibility study gives you a plus or minus 15% engineered project. And the person who does that is in a very good position to do the EPCM. So, and what we'll also have out of that study is not just the definitive CapEx number, but we'll also have a lead order time for all the other items which we can push the buttons on, and we're running those in parallel. So I think towards the end of the year, early next year, but we can line people up. Don't have to wait in sequence. We can do things in parallel for that. So we've already had, funny enough, people to site 2 weeks ago to do contract mining quotes out of Mexico. People so we're running all these studies in the background.
Fantastic. Same investor is asking, are you planning to appoint a COO, a Chief Operating Officer, to build and operate the mine? If so, when?
Yes. Answer the first. We definitely need a COO to construct the mine, and he needs to have construction and mine building experience. So we have a headhunter on that now. When? It depends when we get the right person, but over the next few months. And we're also appointing a mining engineer. We found one in the States who we're very close to offering a job for someone with 10 years experience just to go down there full time as a mining engineer. And on staffing, by the way, we have a full-time hydrologist. I had the architect from Medlimore mine who was there for 10 years working for us now for 9 months. I have the main civil engineer from the nearby Elmore mine working with us for 9 months as well. We have environmentalists, we have socialists, we have social team. We have 12 in the social team. So, but
no socialists, please.
This is too well. Yes, it's a Sandinista country here. So we've got the team in place at the local level to take this through to the next phase. All that staff is there. What we're missing is the CEO, the COO. But bear in mind, my general manager, Isaac, was a mine superintendent at Delimon for 6 years, and he's been with me for 3 years. He's more than capable of taking this with the local team, mainly Nicaraguan team, through and starting the construction and so forth.
Okay, then of course we were talking all the time about fully permitted 3 open pits. So there's a question from an investor: will the permit conditions be met in full by end of July, including the land purchases? This would be fantastic news. And also that is one of my questions. You have to acquire 4% of the land. So is that still a bit tricky? Let's put it that way. And how important is that land?
Okay. Well, first of all, with the conditions of the permit, what we've actually done is we've, rather than apply for an extension, let's say we haven't bought the land. We haven't bought that 4%. So rather than say, oh, we need another 18 months to buy that 4%, we've actually had meetings with the ministry, 3 ministries. And I met the Minister Mansell about this. And we filed with Ministry of Environment, who gives us the master environmental permit, to say we've started. Although we haven't met all the conditions. So how does that happen? Well, what we're saying is we bought the mill, it's coming in. And when we get it, it's going to go to site. It's coming direct into Nicaragua. And we're clearing the site. We're ready, is our message. We've got all the land for the tailing storage facility, for the site preparation. So we've started. So that's the message. Now, under the, but you haven't met all the conditions. Well, actually, there's a thing in Nicaragua where you can have what's called an administrative silence. So if the ministry doesn't object to you starting for 30 working days, you've started. So that's my answer is, what about 18 months extension? We started. Unless in the next 10 days or so, I get a letter saying, no, you haven't. But we met the ministry. We work very closely with the ministries. We know how to do this. I've been 10 years full-time on Nicaragua. We manage that situation with our, and they want to see the mine go up and create the jobs. So we've started. There won't be an extension. I'm 90% confident. We've also agreed with all the tree cutting permits. So they're giving us all these permits, and we're paying compensation for 10 trees for every tree we cut down, and all that's come through. So they've permitted us, if you like, to clear the site. So we started. In terms of the land, we're dealing with 5 landowners now. And they're all financial opportunists, and they all want to sell, and they've all got their price. But my job is to get it as cheap as possible and not pay ridiculous prices. Ultimately, the government will help us get the land, just like the UK government will when it eventually extends Terminal 3, Runway 3, sorry, Heathrow. People are just wanting as much as they can. They're being greedy as hell. We got 4 lawyers on it full time, regular meetings, and we will get the land. So I've been running the company for over 9 months as if I have 100% of the land. I'm not worried about the land. For me, it's a non-issue. I think it gets too much publicity. Maybe I've been too frank in saying, oh, we got 96% of the land, but actually we'll get all the land. It doesn't stop the project. It won't stop the advance of the project. I could write a check out over the next 2 weeks and get all the land. But I'm quarter Scottish, so I'm not going to do that. I want to buy it as cheap as possible.
Of course.
And some of this is also land for land swap, and they're always little, oh, I've got a livelihood, I've got a mercury mill here with cyanide ponds. It's completely illegal, but that's a guy's livelihood. So we then need to work out a way about how do you have livelihood restoration, because he doesn't want to sell. Part of it is he wants money, but he also wants to keep a living going. So these are, but I've got a great team. We're on top of it. It's just taking time, and should we decide yes we want to pay out, we could do. I don't think it's a good use of our money. I'd rather I'd rather do geotechnical drilling and hydrological
Of
tests
course.
and more drilling
Of
on
course.
Mestiza and find another 1,000,000 ounces and
Yeah.
pay
Yeah.
some greedy son of a bitch too much for his,
Yeah.
his
Okay.
land. But he'll get paid 5 to 10 times the local
Mhm.
price. So
Mm.
he's going to do extremely well out of this.
Excellent. Yeah. Okay, super. Then we have several questions from the same shareholder. First of all, do you think or do you want to sell forward gold to finance this? Secondly, are you looking for cornerstone investors? And why are you so undervalued versus your peers?
We'll consider all forms of financing. So forward gold sales will be a consideration.
If it makes sense, yeah.
If it makes sense, but if it doesn't, it won't. I don't actually think we should. Personally, I don't think we should be locked in to fixed gold prices today because I think gold can go substantially higher. So I don't think that I wouldn't hedge it out. I don't think that makes sense. Cornerstone investors, yes, we'll consider cornerstone investors, and that's one simple way to finance the project and validate it. And First Majestic Silver just took $3 million worth of shares because they think we're incredibly cheap. So you're not the only one who thinks it's very cheap. The share price should be double. Why are we cheap? Well, that's really for the analysts to point out. I think Nicaragua might be an issue. It's a frontier market, but we're pretty comfortable here and we know how to operate, and it's permitting everything. That might be a emerging market frontier risk versus, say, Canada, but in Canada it's not permitting everything. And I think the other aspect might just be these obviously execution risk for every project at our stage, but that can be mitigated by getting an EPCM contractor who's built 40 mines before, which is what we'll do. So we'll de-risk it completely with that. You'll see the mining team come in, but you can't appoint these people until the timing's right. If I appointed a COO 12 months ago, he just sat there doing nothing. So, yes, you'd have a name which would keep the shareholder happy, but it would cost you $300,000, $400,000 packages. So it's a question of the timing of bringing these people on, and it's such a good project that it'll attract the right talent to the project. I think that answers the three questions. Why are we undervalued? Well, I think we will do more marketing in Canada, which I think we should do because that's home to 60% of mining finance. But and we're relatively unknown there, but we'll do that.
Okay, then given the share options announced today, can you update on what the non-executive directors are doing for the company at the moment?
Yes, certainly. The share options are decided by the remuneration committee, which is fully disclosed as Jim Mellon, who's an 18% shareholder, and Andrew Cheadle, who's our senior geologist and former head of PDAC. It doesn't involve me. They make the decision. And so the non-exec directors, we have 3 non-exec directors. Jim Mellon has continually financed the project. So what has he done? Strategic advice. He's cornerstoned all the placements pretty much over the last 4 years. And he's a great ally and also got a great Rolodex of introductions. So he's been an enormous support of the company and has visited the project and promotes it within his own network and people following that he has. Andrew Cheadle is a senior geologist, formerly at Goldcorp for 8 years, and you see his bio on our website. He attends every weekly geology call. I have one today, so he's guiding Dr. Luke English, who was previously my country manager, on all the drilling that we're doing. So actually, he not only helps at a corporate governance level, and attended a board meeting on Sunday with me here in Nicaragua to approve the options because the board had to approve it. But he's actually advising on all the geology. And Andrew added 3 or 4 million ounces to the mine plan in Canada for Goldcorp's Musselwhite mine. So he's a mine geologist as well. He knows what needs to go into a mine plan. He's very economic. He's got an MBA. He's a great asset to the company and an unsung hero in many ways. Ian Stalker, a fellow director, is in Canada. He's helped with the SAG mill purchase. So Ian's built 5 gold mines. He's founded K92 Mining, which is now $1.6 billion from nothing in Papua New Guinea. He's built 5 gold mines for Goldcorp and Anglo. Very, very experienced engineer and a huge asset to the board. Promotes us, but also assessed the SAG mill, sat in all the meetings, It's great to be able to pull in on that talent for us. And Kate Harcourt, I mentioned last but not least, was on the board call on Sunday as well. Kate's been with us. She was appointed originally by the IFC. She was on a call with me last week doing ESG, environmental, social and governance. What do we need for the FS level? How do we take it forward? She's a chartered environmentalist in the UK. She's based in the UK and is a superb non-exec director and brings so much experience of several different projects. And the IFC sold the shareholding, as they sold in all mining companies 4 years ago. But Kate's so good, we said, just stay on. We really want your advice and support on the environmental and social side as we move this project forward. So I'm very happy with the non-execs and their contribution.
Super. Then there is a question. Do you think a toll milling agreement could happen for nearer term gold production?
It's possible. There are two possibilities within that. That everybody knows that La Libertad mine has 2.2 million tons of installed capacity, and they maybe have about 1 million tons this year. So there's 1.2 million is spare capacity. We would like to do a toll milling agreement with them. We need to reach terms. Negotiations have stalled a bit recently, but perhaps after we drilled the Mestiza pit with the infill drilling, there might be more movement. And the second thing just to note is that the Mako mine, the San Albino's mine, is commissioning at the moment. They have installed 500 tons a day, which is now running. Well done them for building a mine in a pandemic. They've done a great job in actually getting that up. But they've actually already installed another second 500 ton a day ball mill. But they just put the mill in. They haven't put the tanks in and the generators and everything else to make that work. So they'll need to get their phase one up. But it would be entirely possible to that capacity. The question for them is, can they fill that themselves, or would they like our ore? We've got lots of ore permitted. So yes, would I like early cash flow by toll milling? Absolutely, we'd like to do that. Have we got to reach agreement? Yes. Those are the two probabilities. Will it come off? I can't say it'll come off, but we'd like to do it.
Okay, super. How they are a shareholder? They just bought Merritt Canyon in Nevada. Are they keen on our project?
Well, they've taken 3 million shares, as he points out. I think that's a great vote of confidence. It's the first time we've actually had a gold producer and silver producer take shares in the company, and they've validated and think. Well, I've spoke with their head of corporate development 3-4 weeks ago, where and he thinks we're incredibly cheap. But he didn't know about Condor. There's a guy sitting there in Vancouver for 12 years in the sector and doesn't know about Condor Gold because we're London listed, really. So that's another issue. We need to address that and get more targeting into Canada. But now the timing is right with the gold. Are we in conversations about any corporate activity? Nothing officially to report.
Okay. Is your PEA, as you mentioned in the presentation, is quite outdated, I would say. We saw there is a capex of $110 million at gold 1,250, and also the AIC at 690. So the question would be, do you think for the upcoming BFS that the capex changes dramatically because it was so outdated? Secondly, do you think the AISC are still fine because we had some inflation in the last years also? So meaning, would that still meet, let's say, the $700 level? And of course, $1,250 gold versus maybe a new calculation at $1,600. I think that would give you much better economics.
Yeah, I mean, there's two parts to this. It's not a PEA, it's a PFS, just to correct.
PFS, sorry. Yeah.
It's PFS and PEA, but we've got reserves. It's not the PEA.
Exactly.
Years ago. It's both a PEA and PFS. So I think that the 1250 gold price, if we use 1550 gold price, which is the average now for PFS's FS studies, that'll probably give us more gold because it'll push the pit deeper and take out some of the underground. That is just a general point. At the FS level, we're doing FS level geotechnical. We hope that geotechnical study will give a higher degree of confidence in the pit angles. So it might steepen up the pit angles, therefore reducing the stripping, therefore improving the economics. So it's possible that could turn out to be a positive, but we've got to see what the results are. It might not improve it. I don't know. So overall, the things have been pretty stable. Power costs are up slightly, so that's going up. But I understand there's in Nicaragua, there's 350 megawatts of LNG plant coming into the country and starting commissioning in September, October this year. So the turbines have come in and they're taking LNG ships down from the States. And so that's going to give a 30% increase in supply in the power in the country. So the power costs, which are a big component of any cost of a mine, we are grid power, they've gone up a bit in the last couple of years, but that should actually push it back down again. So all things being equal, I hope that goes down. We also, I think, did our PFS when the oil prices were $100 a barrel. So they're obviously down, even though after the recent increases. Labor costs in Nicaragua are still fairly cheap. I mean, we would pay a driver $300 a month. So you can imagine that, even with truck drivers, if we doubled that, that's still a tenth of the price of Australia or Canada to have somebody. So labor costs are low. So I think we'll be there or thereabouts, but we've got to wait until the economics come back. Of course, there might be a slight increase of 10%, but that doesn't matter because gold's gone up. Exactly. We'd be using gold $700 higher. So if we had 100 more on our AISC, I'm not going to lose any sleep over that.
Yeah, absolutely. Me too. Exactly. You will start, like, I would call it phase one, which is 80,000 to 100,000 ounces of gold. And then you said you want to, let's say almost double that, 150,000 ounces around. So the question would be then, do you have to invest, I wouldn't say the same amount again, but maybe a significant amount because you need more processing facilities, maybe a second mill also. Could you do that out of cash flow? Is it planned like that? Or would you say, no, we prefer maybe to do a debt structure because we are in production, we can afford it, shouldn't be a problem? Are those things you are already thinking of?
Yes, I think that what we would do is the idea is to fund the second phase out of cash flow. A cash flow might be financing debt at that juncture. So I think you'd want a quick payback on your original debt for the first plant of 2,300 tons a day, doing 100,000 ounces of gold a year, and it's super high grade, as I mentioned. And then after 3 years, you're probably going to do that expansion uplift to take it up 50 to 100%. We're laying out, when we do the designs, we'll lay the plant out for there to be a ball mill added so that capacity can be increased by 50 to 100%. We'll use that range. In fact, the instruction will be so that we can double capacity, just in case. Let's say we get another big discovery on the project. So my 5 million ounce theory, if we get by that time to 5 million ounces, we might be saying, actually, we can really double this. It's 200,000 ounce production, but maybe it'll be 50,000 ounce production. But it's of that order. We don't know quite. Yeah, of course. We can either extend the life of mine and make it go for 20 years, or you increase the production. Well, you increase the production, don't you? Because you want the money today to boost your cash flows and NPVs and valuations.
Okay. Let's talk shortly about, we have just spoken only about open pit scenarios, of course, because they are permitted. This is all fine. You have that shallow gold mineralization. That's all good. How would you rate for the future then the underground potential? I mean, that could be significant. Of course, you have to do much more drilling. You have to go much, much deeper. That's also for sure. But we know it also from the US, for example, then you can have an open pit mine and then all of a sudden you go wonderfully underground.
Well, that's right. I mean, we've got 1 million underground ounces underneath the pits. So we've got 1.12 million in the pits, and there's another million underneath that. So, and that's open to depth. So, is it 1.5? Is it 1.5, 2 million underneath it? We've got to drill that. So there is a lot of underground potential. The other thing in these vein systems is you quite often get veins that you don't know about until You're deeper down and you draw sideways. That's why these epithermal vein systems go on for 70 to 100 years, and this hasn't been mined for 75 years. There's there's a very, very good chance that La India vein today, which is 1.3 million ounces, there is another one out there somewhere. That's what we want to find as soon as possible, because it changes the project and leads to a massive re-rating if we say, look, we've got found the next La India vein. Underground, you need grade and width, and on the cross section I showed you at the southern end of the pit, that's exactly what we've got. We've got up to 16 meters true width at 10 grams. That's a fantastic underground target. And even if it averages 8 grams underground width, that's great too. So underground, yes. We know on our PEA studies that we have over 7 million tons of underground at 5.5 grams. If you look back at the old studies, so we've got scoping level, PEA level studies on the underground, which could be material.
And let's think about open pit is done. You want to go underground. Do you have to re-permit fully again, or is just an extension of your permit?
It'll be an extension because the plants, the permits, the plant will be permitted. They'll obviously want the jobs and keep everything running locally. So, and the big thing on permits is the difficult thing to permit is an open pit. If you think the main pit's 1.2 kilometers long, 500 meters wide, 250 meters deep, that has a big environmental impact assessment. If you've got 7 million tons in the pit and you've got a 10-to-1 strip ratio, you're moving 70 million tons into a waste rock dump and 7 million to the processing plant over the life of the mine. So that does have an environmental impact. The portal that goes into the side of the hill, there's no stripping on underground there's no minimal waste rock on underground mining. You're going in and you're surgically removing the vein. So do we have to permit it? Yes, we have to apply to permit the underground. Is it a difficult? Well, it has about 1/100th of the of the environmental and social impact of an open pit. So it's a foregone conclusion that the underground's permitted in my mind. So I would say we have 2 million ounces permitted. So I think the underground's already permitted, Jochen. How about that?
Okay, super. That's perfect. I love to hear that. Then an investor is asking the question of the question. What is the timeline to the first gold pour?
Good question. Well, hopefully we get the bankable feasibility out before the end of the year. We have a CapEx number out based on the mill we just bought, the SAG mill we bought for all the processing plant and everything, and that gets updated to plus or minus. I'd like by the end of the year, if we can, to have secured the construction financing for the project and the long lead items to actually have ordered those. That would be in an ideal world. Financing and markets permitting, and both of those are variables, as you know very well. And then once we've ordered the equipment, the construction period for this is we can start some of that in parallel with getting additional equipment in, i.e. we can do the concretes and the foundations and stuff before other equipment comes in. The construction is probably going to be, it's a minimum of 12 months, assuming everything's there. If this is in Australia, it would be built in 9 months. So they tell me, if everything was there in Australia. It is Nicaragua, so getting everything in and working. But there will be an EPCM contractor who's built mines all over the world, from Australia to USA to Mexico to South America, who's got experience of doing that. So and that's a critical decision for that. And the person who does the FS study is likely to be the EPCM contractor, but let's see how we work with them.
Okay.
So I think the first gold pour, I haven't answered the question. It's a minimum of 18 months away from today and possibly 24 months. It's of that order, unless we go into toll milling earlier.
So let's say like before the end of 2023.
Definitely, yes.
Yeah. Super. Well, that's a nice timeline, I would say. Okay, so let me check here again that we really had all the questions. Yep, that looks good. I have answered that. Yeah, there's one last question. Who do you think is selling if it's not Ross BT? This seems always to happen around the 50 pence share price mark.
I don't know.
Yeah, that's what I thought.
I haven't had somebody coming to me and saying, will you place this line of stock or something like that? So I don't have any particular. I think there hasn't been a hell of a lot of volume in the shares of late, suggesting that there isn't a sort of a big amount of selling going on, or buying for that matter. But I'm not sure who's selling right now.
No problem. Last question, also from my side. What is the relationship with artisanal miners? As we know, the garimpeiros, for example, in Brazil, they could be quite complicated sometimes. So what is the case with you? Because I saw in your presentation, I think through all your social work and that you want to toll mill there, or I think I could imagine you have quite a good relationship.
We've worked really hard on the artisanal miners. We do huge amounts of social engagement programs with them. We inspect their shafts for free. We as a landowner, we're a landowner now of 1,000 hectares, so they're on our land. And we give them permission to go on the land, and they can take ore out for free if it's not in a pit. Whereas other landowners, they leave 20% of the rock there for the local landowner to process through mercury mills. So they actually, if they can get on our land for nothing and keep an extra 20-30%, that's great. But we provide equipment, we do health and safety, we put ropes in, we do tools and pickaxes and so on. There's cooperatives. We've just been drilling in the pit, which I mentioned. There's a small cooperative there, and we have permission and negotiation. We give them fee and money, and we're also the only employer. We've launched training courses for 102 people 3 weeks ago. 85% of those have been accepted, all from people in the local community, to be a big truck driver and get them licenses to do trucks, or be an electrician or a mechanic. And so we're training the local community up to go into the mine. Bear in mind, artisanal miners don't pay tax. They're not on the healthcare system. So in Nicaragua, like Europe, there's the employer, so we pay 21% of the employee's salary into the INSS, which is the NHS equivalent, and it's also an education fund. And so they all want to be on that, because then if they're family, good Catholic country here, their family of 8 kids, they can actually get into the hospitals and so on, which obviously in a pandemic is quite handy. So we do a massive amount there. What we really want to do is let the artisanal miner, who might be earning $200, $300 a month doing very dangerous work without any safety equipment, you want to train him, and he's your future workforce in the big industrial mine. And you pay him double. And you that's what you're trying to do. But he needs to attend those training courses, which we've initiated. The portable water project is also massive, because of the local people, because this is an old mine that's hit hard times, i.e. the mine closed 75 years ago, so the community is an old mining town, there's 40% poverty. We're giving drinking water to everybody and helping with that. That's a massive social engagement. So absolutely. So they need managing. Of course, there can be flashpoints, there's tension, but ultimately it's their mine. And we want to give them a better livelihood, and the mine, they all understand as miners that this is going to change that entire economy, because when that mine's in operation, there's lots of bars, restaurants, many hotels go up, there'll be contracts of the mine, there's often 10 jobs outside the mine supplying and supporting the mine than actually in the mine itself. And so that it's going to really, that $80 million investment is going to totally reinvigorate that local mining community. And the good thing is and we've had public hearings with them to get the permits, and they want the mine. So hopefully we need to manage it. It's not straightforward, but we got a grip of it at the moment. I think we'll be okay with them.
Okay, super. 2 last questions here which just popped up, and they are all belonging to drill results. And please, short answers, because we are already at the hour. When will we get drill results from Cacao, and also when come the infill results completely from the main pit, approximately? I know it's hard to say.
Yeah, Cacao, we'd like to get the whole program back, because I mentioned it's exploration, there's risks, and we need to assess it and so forth. But Cacao could still be 1 or 2 months away. Landia pit, I just mentioned, we've just finished the last hole last week. So we will probably have another update in the next 2 to 3 weeks of some results. But the final results, it's a 6 to 8 week turnaround. So if the longer those, we're probably going to, on the starter pits in Landia, we'll have one probably in 3 weeks and one when we got everything back, which is, let's say, 8 weeks away, when we know what the results are, and a wrap up on that program.
Okay, super, perfect. Just at the hour. That's great. Thank you very much, Mike. We have really answered all questions. That is fantastic. And thanks for a great presentation. And really thanks for answering the questions so detailed. I already see some good comments here. The people are really happy. Yeah, wish you all the best in Nicaragua. And I think we talk quite soon. Thank you very much, Mike.
Thank you for your professionalism, Jochen. It's always a pleasure. Thank you.
Thank you very much. Yeah, ladies and gentlemen, that was our live virtual online roadshow with Mark Child, the Chairman and CEO of Condor Gold. Yeah, you heard it. The project is really progressing. They are doing extremely well. And what I really liked is the fact that the PFS at $1,250 gold was calculated. And now they probably do it at $1,550 or $1,600, but also the costs are not really going up. So it looks like that this new mine project will be even bigger and better and bring much better economics here to the table. And I can imagine there will be the next months will be very interesting with lots of drill results from the main pit, from Cacao. The company has $11 million in the bank, very good shareholders, long-term shareholders, and I think Mark and the team have done an exceptional job. So thank you very much for joining us here today, and I would be happy to see you all back on Thursday at 5 o'clock Swiss time for Fury Gold, and then we go to Canada. But by now, thanks for taking the time